Hey everybody, this is Jim at freechartvideos.com using time-honored techniques to understand modern markets. This video is for educational purposes only, and it is not intended to be used as any form of investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own due diligence and make investment decisions that are suitable for your personal financial situation. I'm not a licensed professional, just a guy that draws lines on charts. So let's look at some charts. Okay, we are looking at a 4-hour chart, and I'm going to fine-tune one little line here. There we go. Make sure I've got that right on this spot and this spot right here. And we are looking at a confirmation on the head and shoulders today with the extended downside breakout, and I believe what we ended the day with on that rally is essentially a pullback to the neckline, and frankly in the vast majority of these patterns this neckline will serve as very strong resistance. And we're going to take a look at like a 5-minute chart, and I'll show you what I think is going on that kind of points to that. I want to remind you the way we measure our expected targets from a head and shoulders pattern, whether it's inverted or a top, is we measure the height of the head, and then we look at the spot of the breakout, and then that gives us the expected minimum target, which in this case is 1160. Now, I had been looking at another pattern potentially for a while when we were seeing the markets like this, but you know, now that we know this is a top, if this had gone out off the top side, then I would have said we would have measured probably here, and that would have yielded a little bit more of a move. But since this is now a confirmed head and shoulders, we lose that top line, and the measurement is made from here to here, and then we add that on to the underside of the neckline, and that gives us about 1160. Now, how do you trade a head and shoulders? Well, there are three typical places where a head and shoulders should be traded. One is at a pullback to the neckline, which missed by about a point and a half at the close today. The second is a return to a level from the end of the breakout in the top of the right shoulder, a 40% retracement of that, or you trade on a return to the line that is drawn over the top of the head and the top of the shoulder. Well, here's the deal. You do the one that comes first. So in this case, that would be the trade is on a test of the neckline. This top does not have a tall enough head to where the downslope from that head to right shoulder line would really give us an opportunity, and the 40% retracement is going to be above the neckline. So you trade on the neckline. Now, if we look at a 5-minute chart, I want to show you what this rally looks like today. And the first thing I want to show you, let's move this line really where it needs to go, right there. The first thing I want to show you is even without this line right here, this has a wedge, kind of a wedge appearance to it, and it's not a perfect wedge. You know, if we ignore this candle right here that has a shadow over the top of that, then that's a pretty good wedge right there. And we've had 1, 2, 3, 4, 5, 6, a little dip, and then another go at the top. And if this wedge breaks down, then that should set up more selling. But again, you know, I mean, you probably, if you're short, you probably want to have a stop somewhere above this point at about 1268. Call it 1272 just to be safe. But guys, this is confirmed today with that really strong downdraft, and then you can see this is setting up a bear flag in the shape of a wedge that in all likelihood will break down, and the selling will continue. And we don't really expect it to stop until we reach that minimum, which is at about 1160. So that's about 100 points yet to go. That's a little less than what I had been talking about when we were doing the other pattern. I was thinking 120 points. But keep in mind that is also a minimum. All right, so it could be more. Once we start getting down into this area, then we start looking for signs that something is maybe starting to reverse up. So look, that is the S&P 500 chart for the day. Let's take a quick look at a couple other charts. Okay, looking at the Dow Jones Industrials, again, left shoulder, head, right shoulder, breakdown. This would be the end of the breakout move, and the Dow could rally up a little bit, maybe to 12,000, but once it gets there, should find strong resistance, because again, that would be the neckline, and it would also be the magic number 12,000 for what that's worth. Let's look at the Nasdaq. Now this one's kind of interesting because the Nasdaq still hasn't broken the head and shoulders yet. So had a pretty good bounce right here, but I suspect that it too will eventually take this out. So care is in, you know, be careful with the tech stocks too. Some of them are looking pretty weak. So look, that's what we're looking at in the markets today. Even though the Nasdaq was up 1%, you can see left shoulder, head, right shoulder, with the S&P and Dow already having broken this shoulder, this neckline. And so, you know, we just got to keep our eyes on it, be careful, be wary, be vigilant, and thanks for watching. Please come by freechartvideos.com and spend a little time with us.